Ladies and gentlemen, good afternoon. Hope you had a good lunch. Great to see everybody back to business. So now we have a next panel, which will cover institutional investors. And this panel will be led by the good colleague of mine, Mr. Antufjevs, who is head of corporate finance at Signet Bank. Edmunds has a great deal of experience in capital markets. He has been issuing bonds since 2013, starting his career in SEB, Debt Securities Division, then moving on to Blue Orange Bank, and then joining Signet a couple of years ago. Edmunds has arranged more than 30 debt capital market transactions over the course of the last 5 years. So Edmund, the panel is yours.
Thank you, Robert. Hi, everybody. During the lunch, we were discussing with some of you that during the event, the activity in the mailbox have decreased significantly because you are the people that communicate with each other. So you were busy speaking with each other and not spamming each other mailboxes. So and that led to another idea that, well, since we have a NASDAQ people in here, the heads of NASDAQ, so maybe we can introduce an idea of having a trading holiday when this conference will happen next year, just to get off completely of the workload. But maybe to kick off our panel, maybe let's recap what we have heard in the first stage of the conference. So what are the key takeaways if you as a company want to do a capital market transaction? So number one, do it in advance and be very well prepared. As you have heard before, it may take 4 years or more. Don't do it alone. Have a set of advisors who do it, and don't be shy of it. So your clients may even be your very best investors. Be as green as you can, as sustainable as you can in any type of form possible. But the most important takeaway for me and probably for you as a potential issuers is that IPOs are definitely not healthy for the company's management. But at the same time, you will sleep better afterwards than we did before. But overall, I got the sense that the environment, despite the challenging environment, the industry is cautiously positive. There are some interest on the market. There are companies planning to do with a capital market transaction. But obviously, with the panel full of investment banks, what would you hear, right? You have to be positive in order to do the business. So let's ask the same question for the second part of the equation. Let's ask the investors. What do they feel? How are they? Are they positive looking at the Baltic markets or not? So let me invite on stage the first one, Andris Kotans. Please, Andris, who's a board member and senior fund manager at CBL Asset Management. And CBL Asset Management is one of the leading asset management companies in the Baltics. And they do invest through various mutual funds, pension funds, and etc. The second on stage, Tautvydas Marciulaitis, pardon my Lithuanian, the partner at Milvas Asset Management. So Tautvydas manages Baltic Corporate Bond Fund, excuse me. And apart from that, he sits on various chairs, being a blogger, speaker, promoter of personal finance in Lithuania. The third one, Vytautas Plunksnis, please. The member of the board and head of private equity at INVL. Within the INVL, he overlooks a behemoth private equity fund, Baltic Sea Growth Fund. So Vytautas would bring today the view from not only from the investor perspective, but also from the portfolio company's perspective, already on the market and listed. The last one on stage, Razvan, Dumitrescu, please Razvan, the principal at EBRD, responsible for capital market development. And well, EBRD is by far one of the largest supporters and investors into Baltic capital markets. And last but not least, we're joining remotely, unfortunately, with Aldis Reims, a managing partner at A3E Capital. Hi, Aldis. Aldis runs a high-yield emerging market fund, investing all around the world and also investing in the Baltics. So we'll hear from Aldis. It may be, unfortunately, for us that Aldis joins remotely, but since he sits in a sunny Malta, that's fortunately for him. I would assume that many of us would trade places. So, gentlemen, thank you for being here with us today. And many people ask then who are the anchor investors in the Baltics? Where are these local institutional investors? So here they are on stage, right? And glad to have you here, and thank you for investing in the Baltics. Just to maybe kick off the discussion, if you would ask any investor for the outlook right now, they would probably paint a gloomy picture. Right? I would ask, what's your performance this year? You would probably say, well, not the best one. But if painting this gloomy picture, you can say that, well, the Baltics are the leading inflation-wise in the Eurozone. Across the EU, the energy crisis is roaring, and we are definitely not an exception. The headlines, will we survive winter this year, is everyday life for many of us, and obviously for the investor, the common border with Russia and Belarus definitely doesn't help. At the same time, we do see a positive signs also, because, for example, the foreign direct investment inflows have not dropped significantly if compared to the pre-this year periods. And we see numerous real estate investors coming to the Baltics and investing, completely new names. So the environment is really mixed, right? And so my first question to my dear panelists, so are you bullish on the Baltic markets right now? Are you, positively looking, and what's your perception for the Baltic market has changed during this year? Right? Andris, maybe let's start from you.
Well, thanks. First of all, this is to thank the organizers. I think this is a wonderful, hopefully, kicker for something that could evolve into a tradition. Definitely from a Latvian perspective, I think this is a topic that has not been on the headlines, which it should be. But to answer your question, maybe a bit of a background. The hat I'm wearing today is one of a pension fund manager and one of a fund manager, basically fund manager who has a global mandate, and a fund manager who has a dedicated debt strategy, but again, global EM or wider European angle. So coming back to your question, am I bullish on the Baltics? Presuming your question is about the Baltic debt market, my answer is that there's no one answer. The markets are fragmented, they are segmented, so giving you one answer is, I would say, impossible. But again, reflecting to what you said, we will survive the winter. There's no question about that. And as a firm, we've been in the market for 20 years in the Baltics, doing at times more and at times less. But we have a long history with this market, and nothing has changed. And probably as a non-index type of an investor, we will carry on and look for opportunities. Maybe the parallel side effect of that is that since we are kind of a permanent investor in the market, there's maybe not that much free money lying around that is not invested, but I'm sure that also in very challenging environments, there can be a match of reasonable credit stories at an attractive pricing that we can look at, and maybe transactions do close.
Mm-hmm.
So, am I bullish?
You have to, right?
I'm cautiously constructive.
All right. Maybe Razvan, from the view from any of these panels. So, are you bullish on Baltic market? And has your perception changed during this year?
So first of all, thank you for having me. It's a great honor to be here again. To answer your question short, we've always been bullish on the Baltic capital markets in that respect. And I think there are a few facts in terms of reinforcing that aspect. Majority of our portfolio in Latvia, Lithuania, and Estonia is actually into debt and equity capital market instruments, which tells you a lot in terms of the appetite to promote capital markets. Of course, I think during the pandemic, but also this year particularly, the role of IFIs like EBRD actually increased. And now this is the moment where we have to step up our game, and actually to be there to support the market. We've actually been in most of the issuances, like Maxima Eurobond, almost 30% uptake. In terms of Maxima commercial paper, again, we are there, even though there's refinancing in that respect. And also at the FSOG SLB, we're one of the anchor investors with almost 30%. And just as a caveat, usually when we invest around 10 to 20%. So you could see our appetite still increased. We are there, but then also the signal for other issuers. And I think in some deals after the February developments, unfortunate developments, we were not contemplating to invest, maybe because of the size, maybe because we thought we're not additional enough, because that's one of our criteria. But then we realized that other investors start sounding around, like saying, oh, what's happening? IFIs are not there. Is that a bad signal? So we actually had to step in just to reinforce the signal that actually are there for the long term. And then, especially in such moments as of now. And one key other aspect is that if you look around, like for the past 2 years, you realize there's been a lot of innovation happening in terms of the commercial paper market, where the central banks worked together to create the pan-Baltic CP market. Then you had the first SLB recently. Then you also had like some senior preferred notes, most like in Latvia. So a lot of things happen which actually are constructive and building on case and reinforcing this kind of long-term bullish trend. Of course, it's also ups and downs. It's part of the journey. But overall, I think the direction of travel, it's north, like in that respect.
All right. So the EBRD look is more long-term, and this year is more like a roller coaster hiccup than and you have not changed your outlook.
Yes, and then in terms of appetite, I think we are even more hands-on. We're trying to support as much. And also on the liquidity side, because of course you have the implications, and that's why we're actively promoting liquidity facilities like commercial paper and other instruments, just to ensure that companies, partners, they do have access to a complete, well-diversified toolkit in that respect.
Mm-hmm. Tautvydas, what's your view on the Baltic market right now?
Well, I'm always bullish. That's why I started my fund. Looking, from the long-term fundamental side, the main risk for me in the Baltics was always Russia. I mean, that was the main risk always. And now, at the beginning of the year, I was really scared, when the war broke out, and I thought, that this risk starts to materialize. But as Ukrainians are beating Russians every day more and more, this risk is decreasing for me, and I'm becoming more and more bullish on the market because, we're still growing, we're still developing, especially looking at capital markets, debt capital markets. The market is very small compared to European, counterpart. It has much place and space to grow. So that's why I'm really bullish. I think that currently the risk premiums paid by the companies are still high and they're still attractive. And I think long-term Baltics will, catch Scandinavia and we'll become, Scandis. So I think that's where we are headed long-term.
All right. So as far as now, we're more or less in line with what the ECM and DCM panels were talking. So cautiously positive. Aldis, what's your outlook on the Baltic capital market, and has it changed during this year?
Hello, everybody from Signet. So far this year, Baltic bonds definitely have been one of the very few bright spots. I would say performance-wise, overall in a global high-yield bond market. obstacle to increase significantly our exposure, but we are investors in Baltics. We have done new trades this year, and overall, I would say we are, let's say, cautiously positive. I think there already was such opinion among panelists.
And Vytautas, maybe from your both hats, as an equity investor and as a representative of the portfolio companies, what's your outlook on the Baltics?
So in Valda, investing in the Baltics from 1991, and we're the first private equity house in the Baltics. So we always bullish, but it depends to whom you are talking, because we are doing three things: fundraising, acquiring companies or assets, and selling those assets. So when we fundraising, of course, Baltics, it's the right place to be. Here we see a lot of good developments. Then if you're trying to buy some company, then you say, look, there is war, energy prices, how do you deal with this increasing labor cost, with this inflation? And what I'm happy about that with this part of, let's say, potential counterparties now, it's easier to speak, and at least now I have the answer to the question, what should I do with the money? Because when the interest rates were zero, I'm selling you company, let's say, for 50 million. What I do with the money, so banks will charge me negative interest, and now you have in the Baltics, outside the Baltics, so even 2 years treasury in dollars yielding 4%. So it's so you can put your money. And then when you're selling companies, again, we are back to happy days, and it's a very good time to invest. I think this part now, it's the hardest, and happily for us, currently we fundraising for forest and farmland, renewables, and private debt strategies. So in all those, you have many positive things to say. But if I would need to, make an exit for portfolio company, it's somewhat harder than it was earlier. But of course, good companies always find willing buyers.
And Vytautas, you touched the topic of pitching the outside investors and pitching to the international investors your companies, your ideas, and I know that many of you, speak with other institutional investors, trying to get them to look at the Baltic states, trying to and actually pitching the Baltic companies as a way of, I validated, I looked at it myself, it looks good. Why don't you look at it? So if we discuss this pitch of the Baltics, so my question: how do you, as an institutional investor, or even as a friend or acquaintance to somebody outside of the Baltics, how do you pitch the Baltic markets? Aldis, maybe I know that you have done quite a pitching yourself, but how do you pitch the Baltic markets to the institutional investors all around the world when you had such chance?
Of course, for high-yield bond investors, always you can find in Baltic bond markets attractive, I would say, pockets of volume, nice yields. Definitely, we have good access to companies' management. We have good corporate governance. Also, it is important with whom you compare, let's say, Baltic bond issuers. So for us, as an emerging market bond investor, we often compare Baltic bond markets and bond issuers with rather exotic emerging market countries. So very often, also we can mention as a significant advantage things like a developed legal system, the fact that we are part of EU, decent investor protection. So I think it's also important actually. So what are your, let's say, point of reference? So overall, of course, it's yield. It's a well-regulated and well-developed overall business environment, and that's basically, I would say, the main positives.
Razvan, maybe turning back to you, how do you pitch the Baltics to your colleagues, to other institutional counterparties?
So I think it all builds up on the success stories that the Baltics region experienced so far in terms of leadership in fintech and green finance. I think many of our panelists actually hinted to Latvian Ergo or like the sovereigns in the region being one of the first in wider Europe actually to tap the green bond market. Now we also see leadership in terms of green finance, in terms of advisory, in terms of the pickup, which follows again what we've seen on the fintech. So that definitely helps when putting to the map internationally. There's another key initiative that together with our partners from NASDAQ and key stakeholders, ministries of finance across all the region, we always try to put the region and promote as one single capital market story. You have 80–90% of the investors are cross-border, they're the same currency, almost same legal treatment. But then you do have some challenges from index providers like MSCI or FTSE Russells that they still feel that there are certain areas that would, let's say, be a challenge in terms of getting to that single status. One key area is in terms of taxation. And that's, I know that the regulators across the Baltics are working together to harmonize that, which is an encouraging step. And of course, if that's enabled, then it's much easier then also to promote to other investors. And as a side point, maybe it's important to note that, for instance, in Europe, most of the developed market equity, they're seen as one single pot of equity, whereas other markets, they're seen as a standalone or like very fragmented. And I hope that together with all the stakeholders here and then also the European Commission, we're actually going to try to address that in the long term. Because if the Capital Markets Union action plan of the EC cannot be implemented at the pan-Baltic regional level, then for sure it's not going to be implemented at the EU-wide level. So it's more of also of a sandbox for the European Commission in terms of delivering on that, if I may say.
Mm-hmm. And Vytautas, maybe if I would be the institutional investor from the outside of the Baltics and you would pitch the Baltic Sea Growth Fund, how do you pitch the Baltic as a region for the fund to invest in? What are your key points?
So we are new Nordics. It means that the same quality of governance, rule of law institutions, but at cheaper prices. And simple examples from private equity. So typical multiple for a Nordic company which is acquired by private equity is double digits. And they're putting like the leverage to those companies at like from 4 to 6 times. And I would say that we are managing here to buy those companies at such valuations, comparable to the debt levels which they put in the Nordics. And it's what we can be proud of. It's our tech and fintech, area, and basically also what I say, and I truly believe that it's true that people in our countries are still hungry and tend to work harder than let's say their Scandinavian counterparts, and this is good for the value creation because if you work hard, you will achieve the result.
So in an essence, we are new, cheaper, harder working Nordics. Yes. So in a gist. All right, Andris, how do you pitch your funds to the outside investors and the Baltics overall?
I haven't used the new Nordics term, but it has some sort of a second-class connotation to me personally. But I'm happy to join using this term if that is what we as let's say the overall the champions of this region bringing outside. I think it's very important that we have a coherent message. But I think I have little to add. I think the institutional development generally, what is being mentioned is something that catches the ear. And from my point of view, when we have to pitch either a wider region or a global EM fund, having the Baltic exposure, which is a differentiator, helps. Generally, the perception of the region is positive, even if people cannot still tell difference between Latvia and Lithuania, and that's secondary. It's the reform champions. It's kind of the faster growing parts of Europe. That is the connotation you can associate with, and I think it's very possible there's positive background to use that one. I think if we establish a more coherent message as an industry, and as the three countries combined, we're in good shape. We're in good standing.
I would encourage everybody to agree to this new Nordics, and I can a little bit elaborate why. Because when you say I'm from Eastern Europe, so top of the mind is like Poland, is Hungary. Should we associate ourselves with Hungary? It's for me, it's and even Russia was Eastern Europe, you know. So new Nordics is, and I wouldn't say that it's second-class connotation, because it's good. It's the same. It's the same Nordics, and if you look at listed Nordic companies, and where they show the map where they operate and home markets, so they show Baltics as their home market. So it's from both sides, it's okay. And also we have plenty of Nordic banks here, so for me it works. And it's when you say I'm from Eastern Europe, then explain, are you from Romania, from Poland, from Hungary, or from Russia?
So I think you might now ask for a trademark fee later on when everyone is going to promote emerging Nordics. But it's a fair point, and echoing your views. And maybe one extra point that's supportive of the region is actually, like in the EBRD countries operation, it's hard to identify a similar region that it's so easy to brainstorm with the regulators, with the Ministry of Finance, with all the key stakeholders, and even test and try to promote different innovative instruments in that respect. And I think that's a key, unique selling point in that respect, because always you can innovate and be one step ahead in terms of product, in terms of dealing with certain aspects, which is helpful in that part.
So Tautvydas, can you agree to the point that you were born in Eastern Europe, but now you live in the new Nordics?
No, I was born in Lithuania. Now I live in Lithuania. I never use Eastern Europe term. I don't really like it. But yeah, New Nordics is a good term. At least I think so. But I mean, to expand on what Aldis and Vytautas especially said, basically, when I'm talking to investors, I always say that Baltics is a developed market where you can find investment opportunities at the prices of developing markets, and you have just a couple of years to get in. After that, they will be gone. I mean, I'm not sure about a couple of years, of course, but in general, I think these opportunities will be gone quite soon, and the pricing will become, much closer to Scandis and whatnot. So, and if you look at macro standpoint, I mean, most of the people here were born, and they have witnessed how we lived in 2000s, and 1995, 2000. So I was 5 years at the time, so not really remember. But anyways, the change that happened is so big, and we do not usually think about it. We do not usually appreciate how much we've done in such a short period of time. And that shows our potential and how much we can do in next 10, 20 years, especially if we have no outside risks. And I think, most of the outside investors from Europe do not really appreciate it and do not really see it. So I'm always trying to, explain and expand on the path that we have taken and the things that we have done, and how much of the upside that shows. So I usually come from both micro side, where we speak about pricing, but I really, more than that, I love this macro story of what we've done and what we are able to achieve.
Mm-hmm. And actually, having the argument of the Baltic pitch being the Baltic exposure as such, it also helps when we help our clients to allocate the funds, and some of them are catered by the UBSs and Credit Suisses and etc. And we as a local bank, I mean, how can you compare it with the equity research of these guys? So what sets local investment banks or local boutiques apart is that you can provide the local niche or local presence, local expertise, which sets apart from just investing in US or in Europe in the large companies. But having said that, and we were touching the Nordics, these are the markets where the business environment and where the shareholders and the management have gone through 2, 3, 4 generations of businesses, sold, exited, started a new one. In the Baltics, the second generation is like max what we have right now, and that is also not a rare thing to have. So what's if you compare, and having invested also in outside of the Baltics, how do you compare the management and the shareholders of the companies compared to the institutionals outside? Tautvydas, maybe you, looking at the more younger generation and the second generation of the shareholders.
I mean, I don't really compare them, to be honest. Well, the thing is that, speaking about this point, that the best part to work here is that you can actually reach the shareholders, not only the management, but the shareholders. You can actually speak with the people in charge, and you can witness this generational change, and you can, participate in it. So I think that it's not the differences between the shareholders and managers themselves, but the key here is the difference how you can interact. I mean, investing in US, for example, it would be really hard, for most of the local investors to get to the, main shareholders of Apple, for example. I mean, I guess some could, but not everyone. While here it is very, very, easy to speak with the people, to understand them, and that gives you a lot of benefits when you invest. I mean, that is huge. This information that you can get, and which, I mean, all the shareholders and managers are very willingly providing. That's gold. You can make very good decisions based on that. So that is the perception I have on this.
Mm-hmm. So maybe let's elaborate on that. So you mentioned you can easily get a beer or have a lunch with the managers or even with the shareholders of local companies, which you cannot do at the European or US level type of companies. So that is the one factor. What are the other factors that benefit for you as a local investor investing in the local companies? Okay, the reach of the management is one thing. What else? Andris, maybe you can elaborate. What are the other factors that helps you to invest locally?
I probably wouldn't overstate this importance of knowing everyone. Yes, everyone knows everyone in our part of the world. That has the risk of being accused of insider trading, and maybe in some cases. But
just beer, no inside information.
Just beer. But I think what really is the reason why would you look at maybe a smaller Baltic issue that is not rated? Of course, using your local knowledge, you may be getting better deal for the actual credit risk that you're taking. That's as a debt investor the main aim, the main goal, to get a good deal for the unit of credit risk that you're taking. So that's always the reason why we invest or don't invest in a Baltic opportunity. So sometimes it seems a good deal.
Mm-hmm. So you stay away from being biased and really look at the credit.
No, I'm not saying that I don't have beer from time to time, but but I think that shouldn't be just knowing having a personal relationship with somebody should not be your main reason to do or not to do a deal.
Aldis, maybe turning back to you, beer or no beer, what's your factors of choosing investing in the Baltics and why it fits to your profile instead of investing internationally?
I'm definitely more pro beer. I mean that access to top management and shareholders, it is very important. Especially, it's very important to understand their way of thinking, their let's say more strategical plans, not let's say often some maybe short-term some information. So overall understanding of their plans and strategy, it's very important, and definitely it allows us to feel much more comfortable. Definitely the familiarity with the local economy and legal systems and local environment, it helps a lot, especially for a smaller and let's say newer companies to the market. Definitely, I think these are main factors, and Tautvydas also mentioned like a number of other things which we fully agree with.
And Razvan, for you as the EBRD can open any door and have not only beer but the full table. But you know, looking from the hat of the Baltic investor, what are your benefits looking locally?
By the way, open door, acting as an owner's broker in that respect. So we do have a certain best practice in corporate governance and in place which is followed at all times. One key aspect here is the human capital in the Baltic region, which is, I would say, one of the best in the world in that respect. You do have a network of knowledge and people that you can reach out and then has a leverage effect in the region. But now, maybe going one step further in terms of the question and then why it worked well, like in Sweden, for instance, or at least from what I see outside, is that they developed the ecosystem internally very well, like the arrangers, the investor, the retail part, whereas I think here is also on the journey for the Baltic region, in terms of maybe sometimes relying less on, I don't know, external part in terms of some arrangers coming from, I don't know, UK, US, to pitch the story in the US, but then you have your pool of assets under management, either to pension funds. You have excedent of, I don't know, maybe 5-6 billion euros up, that maybe a great majority of it is actually exported outside of the Baltics because of limited investable securities here. And that shows you that you can do a lot here with what you have. You're just basically supporting more and more that ecosystem altogether and enabling. And it helps that you have some like open doors in the sense of people willing to discuss with you, to brainstorm ideas in that respect. And that's how also innovation brings along. And maybe it's a good also opportunity to address one of the points I think raised by Paulius in terms of vehicles, conduits to be established. And the EBRD, with support from the European Commission, actually working together with all the Baltic states, with the Ministry of Finance, to develop Fund Baltic SME IPO fund to support the market. I know that authorities in Latvia and Lithuania, they actually tentatively endorsed like I think 20 million each to invest in such fund and mandate Altum and Invega to structure the fund. And hopefully that's one of the structures that will address the right point mentioned by Paulius in terms of on the equity side for SMEs. And there are other products in terms of real estate investment trust, which can go very well in terms of the Pillar 2 pension funds on the long-term investment. So, yeah.
And maybe touching what you also mentioned about the corporate governance and about the ESG sustainability. So everybody's talking that how important it is, and you know, we see it in our daily lives, looking through the info memos and corporate presentation, that every presentation has an ESG angle, even though you know sometimes it looks like it's copy pasted from the other ones that we have received the week before. But so my question, and I know that your mandates differ, right? So some of as an institutional, some of it like hedge fund, more like. So maybe you don't care that much about ESG. But you know, straight away, how ESG affects your investment decision right now, and maybe looking forward. Andris, maybe you.
In substance, I think the ability of companies' management to articulate the ESG strategy is a very strong indicator of the ability of the team to manage the organization. That's kind of a very strong positive factor that will certainly have positive implications for our decision. But it has to be, indeed, as mentioned several times today, it has to be genuine. If it's only paperwork, then that is, I mean, you can tell it pretty fast. I mean, the whole process of how ESG influences our decisions, that's a game in action. There's a lot of regulations coming in, and there's no uniform answers of how best to tackle it. But our approach is that we do adjust the pricing or required rate of return depending on several ESG considerations. And maybe as a side remark on this one, I think it actually will be a bit of a hurdle, maybe during the next and forthcoming years for the smaller companies. Just the requirement for the asset managers to report on all these principal adverse impact indicators. It's a huge mass of data that for, let's say, big international issuers you can just basically buy. And while the local small companies, maybe they get a free window, but they will have to produce that data themselves, which will be a challenge. Now I am hopeful that there will be some practical ways how to address this pragmatically, but that is something that is there, that's around the corner. From the 1st of January, we will have to start collecting the data also on basically all of our investments.
Tautvydas?
Yeah, for me, I'm quite contrarian on ESG. Because for me, that, by now became somewhat of virtue signaling. It's like religious people constantly telling that they're nice and kind. If you have to tell that, you're not. I mean, so ESG is, everyone should be ESG by nature. I mean, it's not something you should write about and, think that, that's something good to do, that's something normal to do. I mean, so when companies start to, really boast about them being very much ESG, I find that a red flag. I mean, I'm like, so didn't you think that you should be doing that, in normal sense? Did this, new laws and governments made you do that? So what kind of people are you? So yeah, so I have this view on ESG, and yeah, for me, I mean, every, like proper normal company with like modern shareholders should be at least somewhat ESG. I mean, it shouldn't be something that you start doing now. It should be your business. So yeah. So sometimes I find ESG as a red flag when investing.
If it's overdone, right?
Yeah. I mean, if it's like they didn't think about it before and now they are doing just because they have to.
Razvan, what's your take on ESG?
Well, it's not breaking news, but for the IFIs like EBRD, as of next year, all the transactions need to be Paris aligned, which is a game changer in terms of what we can do and what we cannot do going forward. Last week, I was hearing the SLB godfather from NL mentioning that they managed to achieve, I think, 15% reduction on their interest paid for the first SLB compared to if they were to go with a plain vanilla, which is a lot. And I think that is also one of the questions raised earlier on in the sense of what you can do, especially when you're a first-time issuer in terms of green bonds, SLBs, in that respect, especially in moments of distress like the one faced now by the markets. And one key other area that the EBRD promotes well, I would say, is the policy dialogue advisory with local authorities, with stakeholders, investors. We've now currently doing a policy dialogue funded by the Commission together with Latvian and Estonian authorities in terms of EU taxonomy, how to be applied in the economy, but also in terms of sustainable capital markets action plan. And that's also something similar we've done in the past in Lithuania, which perhaps also helped in facilitating EPSOG, SLB, and the other SOEs embracing the green finance. So I do hope maybe that in 5-10 years, we're not going to say, oh, all the trends on ESG is going to be, oh, if not ESG, there's going to be more kind of an outlier discussing about plain vanilla corporate bonds. But it's just part of the transition. And I think until there's also going to be, opportunities, challenges, lots of noise out there, also lots of regulation that has to be kind of aligned because, as you know, CSRD, SFDR, and many other acronyms are coming up. And when you look at how to apply, it still takes a bit of time to get to fully understand.
Mm-hmm. And Vytautas, when your portfolio companies do the acquisitions, do you look at those acquisitions from the standpoint of, okay, is this company, would boost our green angle more than in this right now, or and overall, is the ESG important to you in making the investment decisions?
So to make investment into portfolio company, we have to write investment recommendation, which is usually over 100 pages without annexes, and sustainability is key part of this. But we don't look from this angle that this acquisition will make our portfolio greener, but we look what we can do to improve this company, because sustainable companies are more expensive. So next investor who doesn't have to do much in this, and so he will pay more. And my wish for this audience, that once those regulations come in forms, that I wouldn't like that everybody just fills those tables and then there is no time left to do something real, to improve those companies and how they operate. And of course, first point for that, for many Baltic companies, is to measure what's the impact on environment I'm having, because in the Baltics, more or less on governance, we are okay or can very quickly fix all the issues. So on the first day, we install proper corporate governance structure when we acquired the company. On social, maybe we are a little bit worse than Scandinavia, but still we doing okay. So what's left is this environment, and you should think not that I will buy this company which is super green and it will improve my overall rating or whatever, but you should look what you can do to make this company actually better. And I think biggest positive impact is what you can make is cheaply buy bad companies and improve them.
Mm-hmm. All right, and the ESG angle, Aldis, what's your take on the ESG, and how does it affect your investment decision?
I can't say that it impacts us very much. So we of course we look at ESG and definitely so it is important, especially let's say this part of G from ESG. Term like governance, of course, is a very important. But at the same time, we also try to avoid sometimes maybe too expensive bonds just because these are green bonds, and then for example, so try to let's say still be let's say objective and then bring the best return to our investors, but not just to be as green as possible, just per se.
Just for the sake of it. All right, and maybe the last question for the panel before we jump into Q&A, the very short one, and this is the topic that we are discussing probably for the 2.5 years already after the COVID started, and which is not finished yet, right? And this is about the roadshow and about meeting the management or the shareholders and this hybrid roadshow model. So if what's your take on, let's say, do you have to meet the management in person in order to make the investment decision, or it can be done, purely remotely, even though currently you can meet physically? So maybe Tautvydas, what are your opinion?
It really, depends on the company, because, for example, when someone like Luminor issues their bonds, I mean, they can skip the roadshow for me. I know about them. I mean, this is like a major company. I still read, their quarterly reports and whatnot. So I do not really care about the roadshow part. They can basically skip to the term sheet and we can talk about that. But if we speak about newcomers, for example, Coffee Address, who just came, I really wanted to meet them. I wanted to see the operations, and they also gave me coffee, which really helped with, this investment case. But yeah, so it really depends on the company. And then for the old ones, largest ones, it's not really necessary to meet the management. But for the newcomers, I think it's still important, to meet them personally and to understand how we think and what we're doing.
Razvan? So now I understood why people like FMCG companies.
No, I really love when companies provide merchandise. That's why I invest in financials, because we provide cash. So yeah.
Well, I think like the best part is in person. Like you can see the mimic, you can see like the expression is a bit more personal in that respect. So always recommend, especially for the first-time issuers in the process.
Vytautas?
So with the people you meet first time and they asking to invest significant amounts of money in their companies, of course you need to be in person in their premises.
Andris?
Yes, I think the hybrid model, the online model, brings efficiency gains for like initial screening, but I think it is a function of complexity of the transaction. If it is, the more complex it is, the more important it is to see somebody in the eye and to see the body language.
And Aldis, your opinion is the last one. So physical or remote roadshows?
No, I would say that each additional communication channel with companies' top management is very important. And during COVID, we certainly developed a much wider network of online contacts with many companies. And because we invest all over the world, it's very important. At the same time, I would say that direct physical contact is invaluable. And if we take bigger or more riskier positions, then we try as much as possible to have a physical contacts and meet top management in person. That's why we have historically traveled to many exotic countries, and this definitely is important. But I also agree with Tautvydas that it depends very much what kind of trade is it. Is it very well known or something totally new for you?
So to sum up, pack your bags and let's get back to the physical roadshow routine, which probably many of you would be in favor. But yeah, thanks a lot for the panelists. Thank you so much, gentlemen. This is the first part. Do we have some time for the Q&A?
Yeah, there are actually very few. Actually, one, I think, question, because the other one was already answered. The question is, do you see foreign investors demanding higher premiums than before for the Baltic securities due to recent geopolitical events, and that the region generally suffers large economic impact from recent geopolitical events? So
I'll probably rephrase. So as an institutional investor, do you require higher premiums when investing into Baltics? Andris?
Again, the first question you asked, I refrained from a generic answer, and I probably will refrain here. It is fragmented, it is very different, the industries are affected in very different forms. I would say no explicit geopolitical premium, but there are certainly industries and companies that are affected more, and of course that would require more compensation for the investors.
All right, but Tautvydas, what would your answer to this question, let's say in March this year? Would you
my geopolitical premium in the beginning of the year was much higher. Now it just keeps on decreasing. Like I said, Ukrainians are winning and will win this war. So for me, it's the best thing that could happen. So, but in general, it's not geopolitical risk. It's interest rates are increasing, and I'm still amazed how retail investors, especially, are not seeing this. The base rate is now 3.5% for 3-5-year bonds. That's the base rate, and you have to add up 5 to 6% of risk premium to that just from high yield spread. So that's the new base is not 4 or 5%. It's 8-9%. Get used to that, please. It's really hard to speak to some companies where they don't really understand this stuff.
All right, then don't send info to Tautvydas if you're not getting to that. Gentlemen, what's your take on this?
So I would say from private equity side, we see that those investors who were new to the region and exploring some ideas mostly disappeared. So for me, it's good because I'm local, I'm much faster, but of course we need those investors to sell those assets later. Is there any specific geopolitical premium? It's hard to say, but I'm not a bond guy, but when I see like Acropolis or Maxima, how they are trading, so there is somebody who is asking for this premium.
Razvan?
Maybe just to add, I think it's, let's say, an overlap of the pandemic, of the interest rates rise, in terms of also like a bit of geopolitics itself, that they just come at the same time, unfortunately. But in terms of when you look into the risk credentials, in terms of a credit rating itself, I think it's similar to what you have with the peers. Maybe less appetite in Europe itself, maybe also like emerging Europe or emerging Nordics, also because you have like many bond funds actually experiencing outflow in that respect, which then, as part of the supply and demand, automatically impacting also the yields you see when bonds are placed.
I think you can quasi-arbitrage with geopolitical risk because, outside investors put geopolitical risk where, and I see none, so I think that's, quasi-arbitrage here.
But that's the market, yeah.
Maybe if I may add a color to this one, I think it's maybe a topic we didn't explicitly discuss here, but it's related also to the liquidity of the market. And we're not living in an isolated island or we're an isolated system. We're part of the general financial global market. So each time the capital outflow takes place, it probably disproportionately hits the less liquid parts of the universe. So that's, I think, largely what's happening. We can call it geopolitical premium, we can call it whatever we want, but that's a fact of life.
And Aldis, what's your take on geopolitical premium or liquidity premium towards the local papers?
I think that definitely investors are cautious towards Eastern Europe, including Baltics. We can call it New Nordics or whatever we want, but still, I think that we are treated as a part of the world with a significant geopolitical risk, and they are demanding some sort of geopolitical risk premium. So I definitely feel that there is some certain sort of, let's say, sit and wait how all this will settle. So.
All right. Thank you so much. We're perfect on time right now. So thank you a lot, gentlemen. Thank you, Aldis, for the remotely. Thank you.